Hello and welcome to Overview from the IDB. I'm here with Japan's SMBC's two representatives at the event, Arthur Rubin and Carlos Barros. So thank you for joining me. Arthur, you oversee the Latin American debt capital markets for the bank, for the broker side of the bank. Tell me, what are the key challenges when looking at this part of the world?
Well, so far, 2017 has started much more strong for Latin American debt issuance in the international market than anyone would have expected. The third and fourth quarter of last year were pretty challenging for a variety of macro issues, a lot of concern about the U.S. elections and what impact that would have. And most of those concerns, at least so far, have proved to have been overblown. We've seen after a sell-off in, for example, Mexican peso, a strong rally in the peso. The Brazilian real continues to perform quite well. And January was an extraordinary month in terms of cross-border debt issuance from the region. January was, in fact, the largest month ever in terms of volume for cross-border debt issues from Latin America. And the first quarter, in general, has finished strong, though not without pockets of volatility coming from a variety of causes. So the challenges really come around what's going to happen for the balance of the year. There is, I think, a high degree of risk that we will see pockets of micro volatility around things that our new president in the U.S. may say or do. For example, defeat of the healthcare initiative of the Trump administration for a time had the market thinking that fiscal stimulus in the U.S. was going to be pushed off farther than expected, and that as a result, that was causing dollar weakness. Historically, that's not been good news for emerging markets and for Latin American debt issuance, but thus far, the market has largely shrugged it off. We continue to see debt issues from the region well received, oversubscribed, trading well in the secondary market. So I do expect we'll see these bouts of volatility, but each time the need for yield in what is still a very low rate environment has been more important than whatever immediate concern the markets have had.
So quite some turbulence, but also good news coming out of DCM. Carlos, you're based in Brazil, and so the bank has quite a large presence and growing in the country. So tell me what you'll be focusing on and where you think growth will come from.
Well, I think we've been in Brazil for almost 60 years, and we've been doing business with the top tier names, pretty much focused on infrastructure and natural resources. And Brazil is getting off the long recession, and it's already off this recession. We just need to now fix the political side and the uncertainties on this side. But inflation is going down dramatically, and interest rates also following the same way. So and confidence is getting back, definitely. We believe that the sectors will drive this recovery are both agriculture and infrastructure, and those are sectors that we would like to be present. And to the extent that BNDES is slowing down its activities and forcing the private sector to finance more the projects, we have DCM as an important tool, and Arthur has been working close to us and coming to Brazil quite often. That's pretty much our goal, and
so quite a lot of opportunity in Brazil because of BNDES's move and trying to, as you say, facilitate and encourage the private sector to be more involved. Now, there is always quite a lot of offer in terms of infrastructure projects. The demand there, the needs are quite big. How are international lenders and finances responding to this? Because there's still quite a lot of challenges when looking at perhaps proposals and bids and concessions and the legal framework around it. So are we going to see a more stable and business-friendly environment when looking at infrastructure in Brazil?
Well, I think that's the big challenge. We gotta have, we're looking for a better legal environment, more stability, so that we can bring more investors to the country, and also, have the banks financing those projects. So I think that the key there, what is important is the better, legal environment, and the potential is there. We have all the resources to develop this infrastructure sector, and the infrastructure is definitely quite important for the agriculture sector. You saw, a couple of weeks or months ago, what happened with the soy trucks stuck in a road, floated road. I mean, we cannot export if we don't have infrastructure. And this is going to be, ports, airports, roads, and railroads, etc. And the key point is, more a better legal framework.
So you expect this to improve this year?
Absolutely, absolutely. I think the government is working for this to happen, and this is the target of the government. And then you have a better legal environment, lower interest rates and etc. So lower interest rate is quite important because not only for the individuals but the companies, they reduce the debt cost, and so they generate more working capital on their operations, and they get in a better position to invest, because the companies, they've been investing below depreciation over the last years. The production capacity is there, but they need to replace this production as long as we keep producing more, and that's
Very well. Well, Carlos, Arthur, thank you for your comments.